Good day, everyone, and welcome to the Blucora third quarter earnings results conference call. This call is being recorded. With us today from the company is the Chairman and Chief Executive Officer, Bill Ruckelshaus, Chief Financial Officer, Eric Emmons, and the Senior Director of Investor Relations, Stacey Barra. At this time, I would like to turn the call over to Stacey Barra. Please go ahead, ma'am.
Good afternoon, and welcome to Blucora's third quarter 2012 earnings conference call. Before we begin, I'd like to remind you that during the course of this third quarter 2012 will make forward-looking statements, including but not limited to statements regarding Blucora's expectations about its products and services, including but not limited to statements regarding Blucora's expectations and anticipated financial performance for fourth quarter 2012 and tax season growth initiatives and anticipated financial performance. Other statements that refer to our beliefs, plans, expectations for the first half or intentions, which may be made in response to questions, are also plans, expectations, for purposes or intentions which may be made in response to questions, litigation are also forward-looking statements. Because these statements pertain to future events, they are subject to various risks and Litigation Reform Act. And actual results could differ materially from our current expectations and beliefs. To various risk factors that could cause or contribute to such actual results could differ materially from our current expectations and beliefs. The risks and other factors that could cause or contribute to such recent annual report include but are not limited to on the file with another factors and Exchange Commission. Blucora assumes no obligation to update any forward-looking statement on file with the Securities and Exchange Commission only as of the date the statement is made. Blucora assumes no obligation to update during this call. Our management will discuss GAAP and non-GAAP financial measures. Statement is made. In the press release, which has been posted on our website, our management will discuss GAAP and non-GAAP financial measures. We present GAAP and non-GAAP results, which has been posted on our website and filed with the SEC the reason for our presentation of non-GAAP. We present GAAP and non-GAAP results. We have also provided supplemental financial information to our results presentation in the Investor Relations section of our corporate website. We have also provided supplemental financial information to our results in the Investor Relations section of our corporate website. Now I'll turn the call over to Bill. Following his comments, Eric will review the Form 8 third quarter results. Now I'll turn the call over to Bill. Then following his comments, Eric will review the
Thank you, Stacey.
third quarter results.
We are pleased to report Blucora results from our third quarter 2012. We had another great quarter. Total company revenue for the period was $92.9 million. Adjusted EBITDA was $12.1 million, and non-GAAP net income was $10.4 million. Our second quarter results reflect strong performance from the InfoSpace search business. Search revenue for the third quarter was up 62% compared to the prior year, driven primarily by growth in our distribution network. Search distribution continued its positive momentum, posting 78% growth versus 2011. We are encouraged by the performance of the distribution network and believe the cornerstones remain intact for continued growth in this area. As a metasearch provider, we aggregate content from multiple sources to create a differentiated search experience for users and our partners. Our unique position in the marketplace, coupled with our long-standing experience providing flexible implementation and high service levels to our partner network, is a core advantage in winning distribution customers. And newly signed customers have significantly contributed to our momentum upswing in the past 5 quarters. InfoSpace also represents a growing, trusted distribution channel for our search partners. We have been in business with Google and Yahoo each for over 10 years. We distribute the content and results of our search partners across owned and operated properties and, now more meaningfully, across our partner network. We operate in accordance with search partner policies and best practices. We introduce new distribution opportunities for our search partners and drive liquidity in their overall keyword marketplaces. Our search business is defined by this mutually beneficial relationship with our search partners, and we keep their interests at the center of our future growth plan. Looking ahead at the next quarter and beyond, we continue to see opportunity in search distribution. We do expect our year-on-year growth to slow in distribution beginning in Q4 of this year as year-over-year comparisons become more difficult. But we continue to invest in product features, content development, and platform enhancements to evolve our solutions for partners. Additionally, we are increasing our investment in mobile so that we are prepared to capitalize on new opportunities as mobile search continues to develop. Moving now to our tax preparation business. The market opportunity remains strong as we continue to see a secular shift to digital do-it-yourself within the tax preparation market. Tax Act is well positioned to leverage this trend. We remain bullish on the space, and we are leaning forward with additional investments for the coming season and beyond. During this off-season, we spent time understanding our customers to help inform our product enhancements going forward. Our DIY customers are smart, they want quick, simple solutions, and they increasingly want access across desktop, tablet, and mobile devices. We are making numerous investments to the product in key areas, including improved content, additional support services, and new mobile offerings. I want to spend a few minutes discussing these initiatives. We believe that tax law changes likely to be passed late in 2012 or into 2013, retroactive to January, may be confusing to taxpayers. To further improve the customer experience and in anticipation of potential tax law change ambiguity, we expanded our content to help our customers seamlessly navigate through the complicated tax code. We enhance our Tax Act Tax Tutor Guidance tool with new rich content written by our team of CPAs and experienced tax accountants. This new information is customized for individual taxpayers based on their responses to specifically tailored interview questions and includes easy-to-understand tax explanations, tips, and potential savings. We also added new customer support features, including tools to assist our customers through more than 35 life events such as marriage, children, college, unemployment, retirement, and natural disasters. We developed new chat capabilities to offer immediate tax assistance online. We improved our search capabilities in our Answers Center to more quickly provide our customers with the guidance they are looking for. All of these resources, tools, and content enhancements will not only improve the user experience, but will help minimize customer service calls and reduce costs. In terms of mobile, the team significantly improved our capabilities with innovative new solutions. Our customers can already file on any device using their browser. However, this season we are taking it further. This week we launched our tablet app for both Android and iPad platforms. This new app allows consumers to prepare, print, and file their federal and state returns using a tablet. Our tablet app is unique in that users can start their returns on their tablet or on the web at taxact.com and can access their information in either location anytime, anywhere using the same username and password. We also plan to launch a new smartphone app this season to assist with organization of tax data and completion of tax returns. I won't get into too many details about the product until it is publicly launched, but needless to say, we are excited about this new offering. As an online pure play, we are benefiting from the secular shift to digital, and with the proliferation of mobile devices, consumers are increasingly demanding access to applications on any device. We believe mobile is a tremendous opportunity in the long term, and we are committed to offering differentiated products that provide our customers with a convenient, seamless experience on any device. In addition to developing new products internally, we are evaluating opportunities to improve the user experience and optimize our operations. For example, we are evolving our bank card solution strategy for the upcoming tax season. We are finalizing plans for a new partnership with a leading provider of prepaid products to offer our customers an improved prepaid debit card solution with better features for our customers and more predictable economics for us. We see a growing demand from filers for prepaid debit cards, and our new offering provides a compelling alternative banking solution that will continue to serve our filers beyond the tax season. So, we have a number of initiatives underway. Looking ahead to the coming season, we are very optimistic. Last season's strong performance reaffirmed our view that TaxAct is extremely well positioned to capitalize on the demographic trends and technology advances taking place in the DIY space. Given these tailwinds and our positioning as the lead value brand, we believe we can be more aggressive in going after share growth in the long term. To that end, this year we are making significant investments in instrumentation and business intelligence to improve our strategy for attracting new users, retaining existing users, and offering further service and value to our customers. We believe these calculated investments will pay off in the medium term. We think the DIY category will grow units between 6 to 8% in the upcoming year, and our goal for the 2012 tax season is to grow our own units in line with the market. We believe we have a tremendous opportunity in front of us, and we are making smart strategic investments today that will accelerate growth well into the future. Before I turn the call over to Eric to go over the financials, I wanted to take a moment to update you on how our strategy at the Blucora level is coming together. We are executing well against our strategic plan. Our mission is to own and develop leading businesses with excellent management teams that operate at the forefront of digital migration trends in their markets. Our framework for success is to leverage our experienced corporate team in finance, corporate development, human resources, legal, and business intelligence to provide strategic direction and to support business unit growth and drive profitability. Our continued ability to generate free cash flow from our operations gives us flexibility for future growth investments. With that, I'll turn the call over to Eric for more details on the financials.
Thanks, Bill, and good afternoon. Today I'll cover the third quarter performance, provide fourth quarter outlook, and end with some comments on our expectations for the upcoming tax season. Let's begin with consolidated performance. Third quarter 2012 consolidated revenue was $92.9 million and adjusted EBITDA was $12.1 million. Non-GAAP net income was $10.4 million or 25 cents per diluted share, and GAAP net loss was $2.4 million or a loss of 6 cents per share. GAAP net loss was impacted by a non-cash charge of $4.3 million or a loss of 11 cents per share related to mark-to-market accounting for a derivative instrument driven by third quarter stock appreciation. We exited the quarter with $150.4 million in cash, or $3.70 per share, and cash net of debt of $75.9 million. Turning to our segment performance, the search business had a very strong quarter with revenue of $91.4 million, up 62% versus prior year, and up 12% sequentially. Revenue growth continues to be driven by strong performance in our distribution business, which was up 78% versus third quarter 2011 and up 12% sequentially. Our growth continues to be positively impacted by distribution partners launched in 2012. These new partners drove approximately one-third of the year-over-year growth and approximately two-thirds of the sequential growth. We are also pleased by our owned and operated performance, which grew 12% sequentially, driven by our direct marketing initiatives, where we are focused on driving users to our web crawler web property. Search segment income was $16.4 million, up 51% from the third quarter 2011, and up 8% versus second quarter 2012, again fueled by distribution growth. Moving to the tax preparation business, which is in its off-season, third quarter revenue was $1.5 million, and we recorded a segment loss of $1.6 million. As a reminder, outside of tax season, the business has historically generated revenue and segment losses consistent with the third quarter results. Unallocated corporate expenses for the third quarter were $2.7 million, which is up sequentially as we continue to invest in necessary infrastructure to support our businesses. Now for our outlook. For the fourth quarter, we expect consolidated revenue to be between $92 and $95 million, adjusted EBITDA between $10 million and $11 million, non-GAAP net income of $7.7 to $8.9 million, or 18 to 21 cents per diluted share, and net income of break-even to $1 million, or 0 to 2 cents per diluted share. Please note that our GAAP net income and EPS guidance does not include an expectation for non-cash gains or losses related to mark-to-market derivative instruments. Also note the impacts of such gains or losses are excluded from our non-GAAP financial measures. For search, we expect revenue to be flat to slightly up versus the third quarter, as we have seen some slowing in our growth rates, which is to be somewhat expected considering our recent growth trends. With that being said, year-over-year quarterly revenue growth is expected to be north of 35%. Search segment income is expected to be flat sequentially to slightly down on continued overall revenue mix shift toward distribution, coupled with our owned and operated revenue mix shift toward revenue driven by our direct marketing initiatives, which has a similar segment income contribution margin as distribution. For tax preparation, we expect revenue to decrease from the third quarter by approximately $500,000, and we expect segment loss to increase by approximately $1 million. The revenue decrease primarily relates to timing associated with our bank products revenue, while segment loss reflects the revenue decrease. This revenue decrease coupled with increased investments in our operating expenses related to assorted growth and integration initiatives. Lastly, we expect unallocated corporate expense to continue to tick up as we ramp our corporate infrastructure. Before we turn the call over for questions, I wanted to take a moment to comment on our expectations for the 2012 tax season, which will play out during the first and second quarter 2013. We are finalizing our 2013 plans, and as Bill indicated, we're moving down a path to position ourselves for long-term share growth through increased investment. We expect to report tax preparation segment revenue for the first half of 2013 to be $86.5 to $88.5 million and segment income of $45 to $46 million. On an apples-to-apples basis versus the first half 2012, this represents an 8 to 10% growth in revenue related to our tax preparation business and 7 to 10% growth in segment income related to our tax preparation business. Worth noting, our growth expectations incorporate the impact of our anticipated new prepaid debit card solution, which is expected to increase segment income profitability for the tax year 2012, but will slow year-on-year revenue growth rates by 100 to 200 basis points. With that, I'll turn the call over to the operator and we will take your questions.